Hey everyone, thank you for joining us again on this monthly market update here in Las Vegas. It is now spring. We just sprung forward an hour, and I looked at it as we just lost an hour, and my sister-in-law cheered me up and said, "Don't worry, Randy, it's coming back. We'll get it back." So, cheered me back up, but that's where we are. We're an hour ahead right now. So, what's going on in Las Vegas? March Madness. Basketball. Basketball is happening, and Vegas sports books and sports bars are about to get busy. In fact, there'll be lines out the door. I guarantee it. March Madness happens to be one of the busiest seasons for Las Vegas casinos based on all the NCAA basketball fun. So that's what's happening as far as gaming is concerned. The other thing that's happening is spring break. So there's going to be a lot of people traveling, a lot of families, a lot of tourism, and a lot of money being spent here in Las Vegas. It's going to be a busy time of year. That being said, it's also a very nice climate. In fact, March is probably my favorite climate of the year, where I'm probably overdressed for March. Although it was a cold morning today, we're going to start warming up, and it's the one time of year or period that we can keep our windows open and hopefully enjoy the fresh air. I know allergies have been a little rough this year. A lot of people are suffering, including myself. But other than that, the weather is really nice out there. As far as industry pertaining to real estate, there's two major trends that I like to share. One is home insurance. Home insurance and insurance in general has become an issue, right? And one of the issues is that a lot of major insurance companies have exited the homeowners insurance sector. And so if you have coverage with certain companies that are now exiting that market segment, then they're giving you to the end of the policy to use another company to rebind your homeowners insurance, which is critical. So there's only a few major companies offering homeowners insurance right now. And that being said, we are seeing homeowner insurance prices doubled or tripled from what they used to be. And after talking to the insurance experts, we expect insurance prices to keep climbing. So what I would say is, lock in sooner than later. Change your homeowner's insurance right now if you can, because if it goes up and you buy in later, you might be paying more. You wait out your policy now, which is probably low. By the time it expires, you may be paying more long term. So that's something you probably want to talk to your insurance agent about. And a lot has to do with, talking about the why is these insurance companies pulling out, and why is cost going so high? Well, it's supply and demand, right? And if supply of companies offering the product is low and demand is high, then cost is going up. And one of the reasons for cost going up, besides a lot of market volatility, is the fires, right? We've had fires in Lahaina, Hawaii. We've just had a major fire in California. We've also had a lot of buildings with some questionable insurance policies create issues in that market. So the long story short is that prices are going up, and homeowners insurance is getting harder to get. So just a note to you guys. Another trend that has really affected the Las Vegas market is DSCR loans, debt service coverage ratios. We put out a podcast a couple weeks ago about this product. Dax Tobin taught us about it. And it's basically a commercial type loan specific for investors. And instead of the loan qualifications being based on personal income, it is now based on the rental income of the property. So it's bound in a different way, and it really helps major investors that have a very complicated financial life get qualified for a loan. So that's a very popular product that's being used right now that has seriously changed the market. So if you want to know more about that, I will tell you, just check out our other podcast earlier this month or in February, and you can get the details on that. All right, so let's jump right into our housing update and get into the numbers. So quick recap. In January 2025, we hit the market high as far as median price point, hitting $485,000. And last month, we made a lot of predictions on what would happen in February, which we're going to review right now, the February numbers. It is March, but we only have February numbers to review. So that's what we're going to do. That being said, we have 1,781 properties that sold. That's up 200 properties from January, which means that the February market has heated up. It's getting stronger. Again, our median price point was $485,000, setting a record in January. That has actually rolled over into February. No change there, and we're maintaining that market high. I thought we would see minor adjustment, but we did not. As far as new listings, here's one of the stats that I got this stat wrong as far as a prediction in January. And I thought that our new listing count would go up. And so I stand corrected, and there weren't as much listings that I anticipated. New listings are at 2,800 new listings, which is down 331 new listings from January. So less people are listing their house in February than they did January. Why? I have a feeling that a lot of the rollover from the holiday months got listed in January. But I did think that more sellers were going to wait to February or March to list their properties rather than January. But that was proved incorrect, and there were more new listings in January. So that's one stat there. That being said, that's up 10.5% from last year. Median ask price is still $525,000. No change there from January. That's up 8.2% from last year. And that is, again, consistent with January for both median price point and median ask price point. And if you do the correlation, if the median ask price is $525,000 and the median sold price is $485,000, then I can see that there's some price adjustments going on and a lot of negotiations going on. So for you buyers and sellers, this might be some good information for you to bring home. Units available, pretty much the same as well, because it only changed by 14 units. We're up to 5,220 units, 29 units available, and that's up 50% from last year. So units available have gone up year over year, and it's pretty much the same January through February. Effective availability or month supply went down to 2.9 months supply. I thought it was going to go up based on new listings, but it didn't. And we're at 2.9 supply. That's down 0.4 month change from January through February. And that's up 60% year over year. So we have a lot more listings than we do from last year. But, just to give you the same general understanding that I normally do, 3-month supply is a healthy market here in Las Vegas. I feel 3 month is the number where it favors both the buyer and seller, equating to a balanced market. So 2.9 month supply to me is a very healthy market. I think that's sustainable. And unless the macroeconomy and our financial market influences real estate more, I feel really confident in the real estate numbers sustaining. So there you go. Jumping into condominiums, very similar to the single family market. Sometimes they go in opposite directions. In this case, they're kind of following the same direction. Units sold went up, so more sales happened in February than January. We had 515 sales. That's up 100 sales month over month, which is up 20%. So 20% increase in condominium sales from January to February. Our median price point for condos actually went up $10,000. I would have predicted that median price point for condos would have gone down based on the heavy inventory we had in January, but it did not. The number actually went up. I was shocked when I saw the number. And our median price point, again, is $303,000, and that's up $10,000 January through February. New listings is about the same. We have just about 1,000 new listings, about the same January through February. And our median ask price is actually on par with the sale price. So what does that tell us? That maybe sellers are pricing listings to where the saturation rate is or what buyers are willing to spend. And the median ask price is $297,000. And again, the median sold price is $303,000. So sellers might be getting actually a little more than what they're listing for. So some good data to follow there. As far as condo availability, condos available went up 129 units, making it 2,025 condos available for sale today. And that's up 75% from last year. As far as the effective availability or the month supply of condos, we're at 3.9 month supply, which is down 0.7 month supply from 4.6 months of supply January through February. And so condos were at a high at 4.6 in January. This was a big concern because as condos availability accumulate, normally you'll see sales prices start sliding. And in this case, again, it went up, which is shocking to me. But I guess the confidence in Las Vegas is there. And that's what happened. Month supply is at 3.9 month supply, which is up 80% from last year. And more buyers are starting to chip away at this month supply. So we'll see next month if this trend continues, and if month supply continues going down, what will happen with sales. Sales prices will probably go up, and we'll soon find out, right, at the end of March. But these are the things that we'll be continuously watching. Again, there's a lot of investors in town that is probably moving the needle for condos and townhomes. And that's probably the reason why we see so much sales and prices going up in condos. But also condo and townhomes are the most affordable thing on the market versus single family. So a lot of primary buyers are getting condos and townhomes with the emphasis on townhomes. So that's what's happening. And to go back and have the discussion about investors here in Las Vegas, again, we have over $1 billion in real estate investments happening per quarter. And I think right now that's going to continue to climb, and for different reasons than we've seen in the past. And, talking to a couple industry professionals, the conversation is, why is this happening? Why are people investing right now? And, we started this conversation this podcast with the moves that Trump has done with tariffs and whatnot that has affected our financial market. And I think because the financial market is so volatile right now and there's major adjustments going on, that a lot of investors are afraid of it getting worse, and they're placing their investment funds into real estate, which is a hard asset. And in the past, most investors are looking for cash flow with the upside for appreciation, right? That's investment 101. But right now, the third reason investors, I believe, are investing heavily into real estate is that there's less volatility than the financial market. And it's a safe place to shelter money in the long run, right? In real estate, the short-term market can be volatile, but in the long run, real estate always goes up. It's just a matter of how long it takes through every cycle. And again, in the long run, real estate always goes up, and it also hedges against inflation. And so for these reasons, I think investors are continuing to invest in real estate. And I think a lot of investors or people who have cash are smart enough not to leave their financial assets in cash. And I think the reason for that is, cash is continuing to be devalued based on inflation. So it's not the best investment. It might be safe, but it is, in my opinion, depreciating asset. Whereas real estate in the long run is an appreciating asset and it's conservative investment. So I think that's why that's happening. Traditionally, a lot of investors have been in this market for the last 1 or 2 years, really anticipating the potential appreciation and upside for real estate. And again, this all comes down to the simple laws of supply and demand. And right now, Las Vegas continues to be in high demand for relocation and for investment reasons. And then also we have a shortage of supply. And we can talk about that on another podcast, or we've talked about that in past podcasts as well. So in summary, the real estate market based on February numbers seems very sustainable. It seems very healthy. Even with the craziness going on in the world today, I'm very confident in the Las Vegas real estate market. We're going to continue monitoring and giving you updates as we always do. But again, I feel very comfortable in Las Vegas real estate today. So whether you're buying, selling, consult your realtor, give us a call. We can give you all the information you need to make some educated decisions, and the rest will be up to you. So use us for educational reasons, and have a great day from Las Vegas. Take care.